Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. So before we start, let's have a quick look what the markets are up to. So Cheryl, the first day of the week after a long weekend and the cheer is finally back onto the benchmark indices, but a lot of result-specific action.
Absolutely. A very good morning to you, Shrishti. And yes, we are back after the long weekend and markets are making sure to make up for that one-day loss that they had in the trading session. That is because 26th was a trading holiday. So you can see what the markets are doing, up about 1%, over 1% when it comes to the benchmark indices. You have Nifty Bank also that is moving in tandem with the benchmarks. In fact, it's outperforming the benchmarks a tad bit with a 1.6% uptick coming in for Nifty Bank in today's trading session. If you look at list of gainers, you definitely have the Adani Group counters ruling the charts when it comes to the Nifty index. But apart from that, you also have ONGC, Coal India, Power Grid among the other set of gainers, and Reliance Industries. That one is seeing an uptick of about 2.7% as we speak. While on the flip side, and if you look at the losing end of the market, you only have a handful of losers in today's trading session. Now, among the losers, the top losers are from the pharma pack. So you have Cipla as well as Dr. Reddy's among the top losers on the Nifty, followed by Infosys, LTI Mindtree as well as TCS. So it looks like the defensives are actually taking a tad bit easy in today's trading session. So let's look at the sectoral picture then. Is the IT index, that's the only sector that is seeing a shade of red right now. The IT index is trading flat with a negative bias, but apart from that, all the sectoral indices are gaining in trade, with the energy index seeing uptick of as much as 3.4%. You also have the PSU Bank Index also seeing good gains. So that's the way how the markets are looking like at this point in time, Shrishti. Definitely starting the week on a very firm footing.
Okay, but with this, let's quickly get to all the stock-related queries, because every day we get tons of queries that still remain unanswered. So in the first segment itself, let's kickstart taking all your stock-related queries. Viewers, remember you can connect with us live on a WhatsApp number that will be flashing on the top of your screen, or you can also write to us on our Twitter as well as Facebook pages, and we'll try to answer as many queries as possible. But to answer the same, today we have two of our very special guests joining us. On the technical front, we are being joined by Ruchit Jain of 5paisa.com, and on the fundamental side, we are being joined by Ashish Maheshwari from Blue Ocean Strategic Advisors. A very good morning to both of you, and let me kickstart with the first query that I have, that is coming from Atul from Dubai. And Ashish, he wants a view on Vedanta. He's been holding 120 stocks at a price of 230 rupees. One of the result candidates today did react onto the earnings. But how do you see Vedanta for the long term? Since he's at a profit, what will be the advice?
Will be to remain invested in Vedanta. Two, three reasons. First of all, we are expecting some more China stimulus coming, so metal prices will go up. And whatever the debt rollover related issues were there in Vedanta, because of that, the stock came down from 320 to 220. I think they are at the back burner. So gradually, how other metal stocks are going up, Vedanta will also start performing, and high dividend yield I think will continue here. So a good dividend payout also you can have. So my suggestion will be to remain invested and try to exit at 300 plus in this stock.
Right, the next one is coming for you, Ruchit, and also welcome aboard Buy Now, Sell Now. This one is coming from Rajiv. He's writing to us from Mumbai, and he wants a short-term view on Nelco as well as on BEL. I believe, I'm not sure if he's already invested in the counters or he's looking to invest in the counters. But what's your take on the charts, Nelco and BEL? How are they looking?
Yeah, hi, very good afternoon. Well, if I first look at the Nelco, it seems more into a consolidation phase from a short-term perspective, where 900 to 750 has been the broad range since last few months. So I think as of now, if he's already holding the position, then he can continue with the stop loss below 750. But no, ideally breakout would be above 900. So do not expect any significant momentum in the short term until the stock crosses levels of 900.
Right. Ruchit, the next query that I have is coming from Tushar, and he wants an advice on Power Grid as well as NTPC. Both of these PSEs, can he go ahead with a fresh investment at this point in time, or wait for some dips to enter into?
Trend seems to be quite positive, because if you see it last 1 or 2 weeks itself, when markets have seen some dip from the high levels, these stocks have continued to do well. So I think yes, overall the trend continues remain strong, and usually when you're looking for investment in such outperforming counters, I think it's better to invest in some part amounts at current levels. Also, I believe that you can invest some amount over here, but keep a room to average that in case if we get any kind of some corrective phases in the short term, then at low levels you can add more. So both the stocks, looking at the outperformance vis-a-vis the market, I think they both are good buy. You can expect good returns over next 3 to 4 months period also. But yes, as I said, buy some quantity over here and look to add more if we get any dip in the near future.
All right, this one's for you, Ashish, from Murli. He's writing to us from Bangalore. I'm not sure if you tracked this counter. It's Hyderabad Industries. He's saying that he has some shares at a price around 5,531 rupees per share. He's been holding on to this counter for the last 2 years, but he wants to know now should he book loss and look to invest that money in Wellspun Corp, whose order book is actually swelling.
Yeah, in fact, Hyderabad Industries also has given good return, though slowly there's a slow and steady kind of stock. But I think now as the construction based stocks are moving up because this is the company which make asbestos roof sheet, etc. So demand will continue here as far as numbers were concerned, though last quarter was a slight setback. But in my view, this quarter is going to be again a turnaround quarter here. So wait for 3,000 rupees at least, then you can exit. But don't sell at this level.
The next query that I have, Ruchit, is coming from Hema Chandra. I guess he's writing to us for the first time, and he has a query on NFL, National Fertilizers, where he is holding 2,000 shares from a price of 105 rupees. And as we get near to the budget timing, all these counters seem to be buzzing. But what's your advice for the short to medium term, maybe for the next 6 to 9 months? What should be the return expectation?
So the entire fertilizer theme has been buzzing, and we know that these are more cyclical stocks. That when the cycle turns up, then they can continue this outperformance for a longer period of time. So as of now, looking at the price volume action last 2 months, the volumes have been quite good along with the price up move. So you can expect this up move to continue. I think 148 to 150 is where the next technical resistance will come. Which were the high earlier all-time highs. So hold for now, but no, I would advise to take a review again when the stock reaches that 148, 150 zone.
All right, this one is coming for you, Ashish. This one is coming in from a viewer who's not mentioned his name, but wants to know about BPCL. He's purchased BPCL at the levels above 360 rupees per share. He wants to know, should he stay put with his holding in BPCL or look to book out profits now? 3,500 shares he has of BPCL.
See, I'm quite bullish as far as oil and gas stocks are concerned. And BPCL is one of the best performer if you ask me compared to HPCL and IOC. And looking at the profitability is still almost at 1 lakh crore market cap. BPCL looks cheaper to me. In my view, the stock has potential to touch 550 to 600. Because the way you see the rally has picked up in even Chennai, Petros, and MRPL. BPL is a market leader. So ultimately, how we have seen NTPCs and Coal India moving, BPCL will also move higher at higher trajectory. So wait for 550.
Right. Ashish, the next query that I have is coming from Harpreet from Masuri. He's writing to us for the first time and highlighting that in this bull run, a lot of counters have done well, and some of the stocks which he already has, he needs an advice. Is this a good time to book out profits? In Tata Power, he's having 50% plus profits, Tata Motors 70% plus profits, and NTPC 85% plus profits as of now. Any advice to book out profits in any of these names?
No, I don't think so. First of all, reason is that you have invested in all the good companies. Tata Power, Tata Motors, etc. are one of the best performers in their categories. So Tata, in fact, NTPC also, I am very bullish. I am expecting another 100 rupees even possible from NTPC. So I think the need of this hour is to buy the blue chip stock and remain invested because the valuation is still looks attractive of these companies. If you look at the Tata Power compared to Adani Power and others, the valuations are still at much deep discount. So stay invested in all these three stocks. Will give you even further 20% kind of upside in this year.
This one is come from Guru. This one is for you. Ruchit, he wants to know about GSFC. Gujarat State Fertilizer. He has about 100 shares at a price of 120 rupees per share. What sort of a target would you advise him to keep in mind while being invested in this one? Because as you can see, it's made very good profits for at least Guru.
Yeah, so the stock has also done quite well over the last few months, and we already spoke about the fertilizer as a theme that can continue to move up. But no, it is trading around its all-time high, so it's very difficult to give a particular target. But I think the best way to ride this trend is look at the supports for the stock and continue to ride the trend unless we see any kind of reversal. So the 20 DMA support is now around 280 to 270 range. So I would advise him that continue to hold the positions, keep a stop loss of 270 for now, and rather than keeping any particular target in mind, keep revising the stop loss higher as the stock moves higher. So keep a stop loss below 270 for now and continue to ride this trend.
Once again, coming to you, the next query that I have is from Samir from Kerala, and he wants an advice on two counters. The first one is APM Industries. I'm not sure whether you track this one or not, but he's holding 1300 shares at a price of 68 rupees at a profits in this one. And he also has Engineers India, 700 shares at a price of 156 rupees. In both of these, he wants an advice, good time to book out profits or continue to hold. Ruchit, if you can hear us.
Don't have much idea about APM Industries because the chart structures are very limited from that. But yes, Engineers India, I think the charts look quite promising. The entire PSU basket has been doing well. The price up moves have been supported by good volumes. And according to retracement, the stock has potential to go higher towards 270, 280 kind of range over the next few months. So I would advise to continue to ride this trend in Engineers India, and around 270 to 80 targets can be expected.
It's also coming for you, Ruchit. A lot of short-term queries hitting our boxes today. Sri Krishna from Hyderabad has 800 shares of NBCC, which he's purchased at 99 rupees per share. Wants to know whether he should look to book profits or continue to hold on to NBCC. And also, what sort of a short-term high do you think that this particular counter can hit? Anything visible on the charts?
So yeah, even this counter has been doing quite well along with the other PSU names, and 145 technically is the next resistance which could come in. So from a short-term perspective, if he's looking to book out, so I think if he gets levels around 145, those ideally should be good levels where profit booking could be done. But for now, the trend still remains positive. A good outperformance has been seen in the stock, so one can continue to hold for targets around 145.
All right. The next query that I have, Ashish, is on one of the recent listing, that is ESAF Holdings, wherein Krishna Bhardwaj is holding 1,000 shares at a price of 70 rupees. Just 1 month back, he entered in this one. He wants to know any short-term target that you have in this one, because since it's a recent listing. So any take on this, and can he go ahead and add 1,000 more shares at a similar price? Any take on this one?
The small finance bank, if you ask me, is a underperformer as far as banking stock and private sector banking stocks are concerned, and it moves in very narrow range. So my suggestion will be to exit from this stock, and instead of this, look at PNV, which can give you much better return. The stock is already performing well, and I'm expecting next 1 year is going to be a very good year for PNV because there is again a big valuation gap building up between BOV and Indian Bank and the service PNV. So ISAF India is ISAF, a small finance bank, is a sale in my view.
We'll request Ashish and Ruchit for actually standing by for a bit, because we'll just address Equitas Small Finance Bank's numbers, because they have already come out with their numbers. But let's understand more about where they are projecting for their numbers to go ahead, and also the growth. We've got P.N. Vasudevan, who is the MD and CEO at Equitas Small Finance Bank, joining us. A very good morning to you, sir. Thank you so much for joining us in ET now. Firstly, let's talk about the asset quality. There has been an increase in the NPAs. You have slippages also that has spiked up. Flood was one of the reasons, but apart from that, we also saw an uptick in your NPAs in the microfinance business. Are you envisaging any stress building up for the coming quarters as well in that particular segment?
See, actually, our normal levels of NPA pre-COVID has been around the 2.5% level. And in second quarter, first quarter it was just about 2.6. In the second quarter, we actually did one ARC sale, and because of that, the NPA had come down to 2.12%. In the third quarter, the NPA normalized a little bit. It went to 2.29%. If you include the securitized book on the gross asset basis, our NPA has gone up to 2.29%, which I think fairly well under control, especially compared to our pre-COVID normal levels of 2.5. We believe that our NPA is quite under control. There was some amount of rains, excess rains during the last quarter, especially in South and Tamil Nadu. That did have some impact on the collections, but that is very seasonal and it keeps happening all the time. So that is not something that is new to us or something that we are experiencing for the first time. So the seasonal rains and seasonal impacts are something very normal. And but our overall NPA remains within our comfort zones of the pre-COVID levels of around 2.5%.
All right. Good morning, Mr. Vasudevan. This is Shrishti also joining in. If we look at your credit cost guidance, then that is at 1.25%. Again, a little higher than the current levels. So do you look at it as a conservative target, or should the investors expect any stress from other pockets of your book?
I think we have guided 1.25 in the beginning of the year, and so one can presume or work within that range. As I mentioned, the actual credit cost in the first 9 months is much lower, and so we should hopefully end up at a level which is less than 1.25 for the full year, even though we had guided 1.25 in the beginning of the year.
All right, let's also talk about the loan growth then, as guided between 25 to 28%. If I look at your actually housing finance book, its proportion is up from about 7% in Q3 FY20 to about 12% of AUM in the current quarter. That's the now quarter that you reported your numbers. Is it a strategic move to increase the share in the housing finance in AUM?
So overall, our advances growth has been around 32% for the first 9 months. And yes, we have guided for a 25 to 28% growth for the full year because we do have a larger base effect in the last quarter of last year. And so we do expect that even though the growth should be strong, but percentage might come down because of the base effect. Within the advances portfolio, if you see, our small business loan is the largest, which is around 37%. Then vehicle finance follows that, which is around 25%, and microfinance, which is about 18%. So these are all kind of mature portfolios. They have been there for a long time in the company now, and so they're kind of maintaining their contribution levels. Affordable housing finance is something we just started recently, maybe about 3 years back. So it's still at a very nascent and growth stage. And so you would see that the disbursement and advances growth of affordable housing will be larger than the overall bank's credit growth. And that's why you see the contribution of affordable housing going up. Currently, affordable housing is about 10% of the total advances book of the bank. And we expect that over a 5 year period, I mean, I'm talking of a little bit longer term, 5 year period, we should be looking at affordable housing contributing almost around 15%.
All right, Mr. Vasudevan, if your NIM target for FY24 is at 8.5% and possible exit at 8.25% on the lower side. So between these two, do you see any levers for NIMs to move more towards the upper end of the guidance in Q4?
Yeah. So as far as the NIMs are concerned, in the beginning of the year, we had mentioned that our exit NIM for the fourth quarter could be around the 8.25% level. And the NIM for the overall year, the full year, could be around 8.5%. That's what we had kind of, expected and guided in the beginning of the year. And I think we are fairly playing close to whatever we had guided. The NIM for the third quarter, exit third quarter was 8.36%. It might drop down by another few more basis points in the fourth quarter, so that 8.25 or just around that is something very, very, very likely. And the overall NIM for the 9 months so far has been around 8.56%. So it might marginally drop to that 8.5. So I think what we guided in the beginning of the year is really playing out more or less in line with our expectations. And so, as I mentioned, if the interest rates remain where they are today and do not really go any further up, then we might see over the next 3-4 quarters, we might see a reversal of the effect that we have been seeing for the last 1 year.
Right. And lastly, Mr. Vasudevan, let's talk about your Kasa ratio. If you could tell us about your bank particularly, given that the industry is actually seeing a downtick in Kasa, how do you actually see this actually reflecting or auguring for your bank?
Okay, so as far as the CASA is concerned, yes, for the first time in the third quarter, we are able to hold our CASA percentage. It has been coming down steadily over the last 4 or 5 quarters. We were at a peak of 51% at some point in time long back, and it had been coming down. For the third quarter of this year, finally, we have managed to hold the CASA percentage at the same 33% level as the previous quarter. Um, and one more very important thing that I would like to highlight is the fact that out of the total incremental deposits that we got over the third quarter, whatever the additional deposit that we got in the third quarter to fund the bank's growth, almost 80%, I think 78 or 79% of that incremental deposit is from retail deposits. So it's not bulk. We have been able to significantly improve our retail deposit mobilization, and almost 78-79% of all our incremental deposit, which is helping to fund the growth of the bank, has actually been coming from the retail deposit. So I think that's something that we feel very comfortable with.
All right, with this, we'll let you go on that. Thank you so much, Mr. Vasudevan, for joining us today and helping with the growth outlook for the bank in the times ahead. But with this, viewers, it's time to slip into a very short break, but don't go anywhere. As we come right back, we'll continue taking the stock-related queries with Ruchir Jain as well as Ashish Maheshwari and help you guide better. So stay tuned for more.
Welcome back. You're watching Buy Now Sell Now on ET Now, and let's get some of the fundamentals queries answered now by Ashish. And Ashish, coming to you, this one is coming in from a senior citizen, Pradeep, who's writing to us from Kolkata, and he is someone who has a vision of around 18 months. And also, if you talk about the longer term, then it's the 2 years mark is what he's going to hit, he's saying. But he wants to know about Hariom pipes. I don't know if you track that one. He already has 100 shares at a price of 353 and Angel One, which he purchased at the levels of 1,559 rupees per share. He wants to know whether it makes sense to hold on to both of these counters or look to actually exit them and book out profits is what he wants to know.
As far as Hariom Pipe is concerned, a small cap stock with around 1,500 to 1,600 crore market cap, but we have seen good run up in this stock already. So my suggestion will be, instead of this, you can look at other stock like APL, Apollo Pipe, which can give you better return. As far as Angel One is concerned, this is again a stock which has appreciated quite a lot, and now time has come to look at other stocks like MOFL, that is Motilal Oswal Financial Services, or Anand Rathi Wealth, which can give you better returns than Angel One.
Ashish, the next query that I have is on the back of recently announced PM Suryodaya Yojana, and Devashish wants to know that any of the stocks from this sector that you like at this point in time. He has names like Vare Renewables, Borosil Renewables as well as SW Solar in mind, where he's planning to go and invest for the next 3 to 5 years. So any stock you like from this pack?
Instead of this pack, actually, I have my own pack, which is I'm not like to go for companies which are manufacturing these solar power equipment, because there's very stiff competition in this segment. Instead of this, those companies which are implementing this or financing this will be a better option. So my number one bet is RECA, which is a nodal agency for this implementation. And from 10 gigawatt to 40 gigawatt, entire funding will be routed to REC. So REC has a long way to go. Second stock will be Irida, again This is a stock which can even can greatly get benefited out of this development. And the third stock which I like here will be SW Solar. So these three are my picks.
Coming in from Ram, he's writing to us in Coimbatore, Ashish. He's saying that he has Coal India and he's been averaging about 156 shares of Coal India between 2011 to November 2021. And also he has NHPC also that he's holding in the levels of about 29 odd rupees. And this he's been holding on since November 2011. He's saying both of them have been fantastic when it comes to dividend yield as well. And he's made some very healthy profits in holding both of them. Now he wants to know, makes sense to stay put with both of these PSU counters for the longer term, say for around 5 years?
Yeah, in my view, power demand is going to increase day by day, and these companies are sitting on a lot of cash, be it NHPC or Coal India. So, Coal India is going to be one of the best performer in PSU in 2024, in my view. So, remain invested in Coal India. NHPC already is at 52 high, but it still has got more potential. Asset. So, for a target of 130 this year, you can continue to remain invested in HPC. And Coal India is one of the best bet for this year.
The next query is from Rebecca, and she wants an advice on a couple of names where she's looking to make a fresh investment. She has names like South India Bank, GMR Infra, Indigo, as well as Trent in mind. Any of the stock that you like at this point?
Is this query from me?
Yes, yes, Ashish, for you.
So, GMR Infra is going to be bet number one in this pack. In my view, whatever the big expansion plans are taking place in airport segment and the way passenger traffic is going up, GMR Infra after the almost 10% correction from high, a whole lot of potential. And South Indian Bank can be also looked at this price point. I don't see any major downside risk from here. Fundamentally good bank, good results, etc. Too. So both of these stocks you can safely invest.
Right, on that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. More on the other side, viewers, so don't go anywhere.